Hey y'all. Hey, hey. What's going on? For you all that are not familiar with me, my name is Cierra Thurman. I'm your favorite real estate agent here to help you build a legacy that moves you. We've been doing this series called Building and Bonding, Assembling the Dream Team, where I'm introducing you to my personal dream team. Each and every individual person that you're going to need on your real estate squad. And tonight, you all are in for a treat because we have Miss Nina Gonzalez of Guaranteed Rate. She is a lender, a loan officer, a traditional lender, right? And she's going to give us so much information. So make sure if you all have any lending or financing questions, drop them in the chat. Otherwise, just be ready to give some good energy. I want to see some emojis. I want to hear you all questions. And Nina will be joining us shortly. I'm waiting for, oh, there she go. Hey, Nina. So I'm getting ready to invite you to the chat, Nina. And all you have to do is accept. There you go, beautiful. How are
Hey,
you?
very good. Here, let me get my volume going. Let me get my volume
Oh,
going,
my
girls.
girl.
I am here for it.
Yes, ma'am.
All right.
I can hear you. You're clear.
Okay. I
Looking
just
just
agree.
so
Thank
beautiful.
you. Thank you. Hold on. My holder, why it cooperates so well. Now that I need you, come through. Come through.
It's okay. So while Nina is setting up, again, we're talking about building and bonding, assembling the dream team. Every single person that you need on your real estate squad, I will be interviewing them. Miss Nina, she's personally on my real estate team, and she's the best in the business. Okay.
I'm
So
here
if you all
for
have
it.
financing questions, if you have lending questions, she definitely is gonna get y'all together.
So I think it might be a little wobbly. This is my go-to stand, and it always comes through and work, but that's okay. We're going to come right through it.
We're gonna get it
We're
together.
going
It's
to
all
get it
right.
together. We're going to work it. We're going to make it happen.
So Miss Nina, can you introduce yourself?
Yes. Thank you so much for having me. First of all, thank you, Cierra, for allowing me to join you tonight on this platform. I'm just so honored and humbled to do that. Nina Gonzalez here. I am Loans by Nina on every social media platform.
Yes, you are.
I have been a mortgage professional and in the industry for 22 years.
Woo!
My background my background is and was usually in community lending, nonprofit lending, and I worked for different organizations just on the affordable housing type of realm.
Mm-hmm.
So about 6 years ago, I came out to the forefront as a traditional mortgage lender, but those connections are what allows me to stay in tune with all of the specialty programs, everything that's
Yes.
happening in development in the city, in the county, and even at the state level.
Great. So for this particular chat, I'm gonna ask you a million questions because I got a lot of them. But I want to focus especially on first-time buyers, right? Those people who are afraid of purchasing. It's scary to them. Maybe they're the first in their family to ever do it. So I want to make it really simple and again, just break it down. Even some of the things, a lot of times in real estate, we use a lot of terminology that it's so familiar to us that we don't realize that someone else, it might be going over their head, right?
Mm-hmm.
So I just want to break it down to just the minute details. So let's talk about preparing for home ownership, what that looks like. Usually I get questions like, I don't know if I'm ready to buy. So if you had a person coming to you, what credit score do they need? How much money do they need in the bank? what's the best way for a first-time homeowner to prepare to purchase?
I'm going to bring it to the core level. One of my strengths and one of, I guess, the least talked about preparation is financial guiding. So we'll talk about everything else later. Like I can get you into a house, I can make it look good on paper, but financially, are you in tune with what's coming in and out of your finances daily? And most people are not. With, we don't write checks anymore. Everything is auto pay, or you just swipe, or all of the apps that we use are automatically paid. And that's where, at the core level, I think that's one of the biggest things is getting a budget together. You don't need a budget to work with me. You don't need a budget to go work with you and see how. You need a budget for your success as a homeowner, as you look to buy a second property, and as you look to teach those around you, mold your children, siblings to also be owners. Because one of the things we have to keep in mind, we're in a metropolitan area, and even in the rural areas, rents are going up.
Yes, they are.
Rents are going
up. Yes, they are.
So renting is not for everyone. Some people rent because they don't know how to buy, right? So it takes individuals like you and me to say, hey, we can get you into a home with a 580 credit score, but I would love a 640 so I can see if I can get you some assistance towards down payment.
Yes.
I would love to see you at a 720 if we're looking for a conventional type of financing. And I have the tools that will get you there. Okay. So first is knowing where your paperwork is, and we'll talk about the paperwork, but there are so many people who do not even know where to locate their pay stubs.
Wow. Really?
Because yes, because things are auto pay, right? So we have this automatic digital life that even people who are not technology savvy, like somebody say, I don't know how to mess with a computer, but they know that their paycheck goes into their debit card, and that's where they go withdraw, and that is how they manage their finances. So knowing how to get all of your paperwork and making sure that you keep track and systematically understand how to obtain your pay stubs, how to acquire and keep your tax returns in order, and how to get a copy of your bank statement. So that's a elementary core. That's it. That's where to start.
And for those who are just tuning in, what Nina is speaking about is your home ownership file. I like to get that file together for my clients and help them get those documents. So Nina, can you go over those one more time? Yes. What are the documents that they're going to need in their home ownership file?
We will need your income document. So if you are a W-2 or you receive a pay stub, you're going to need to document the last 1 month of income with your pay stubs. So if you get paid once a week, that's going to be 4 pay stubs. If you get paid bi-weekly, that's going to be 2. Semi-monthly, that's going to be 2. And if you get paid monthly, then that's going to be 1 pay stub. So you want to demonstrate a full 30 days of pay. Okay. Then we want to have access to your tax returns. To get qualified for a mortgage, you only need W-2s if you're a salaried person. Tax returns are required for different scenarios, like if you're self-employed with
1099.
1099. You could be an Uber driver. You could be a CDL driver, and you're technically self-employed because they lease out your services for driving.
Absolutely.
So there are different reasons why we need certain tax documents or not, but the basic is your W-2s. And I always ask, do you know the difference between a W-2 and a tax return? Okay. And this is because I want to clarify it for you. It is not a quiz, right? I want to help you understand what that is. So the W-2 is the document, the tax form that your employer provides you so you can file your tax return.
Right.
Not every file needs tax returns.
Mm-hmm.
Okay. So that's going to be number 2. Those are tax documents. Concentration on W-2s. And then we need bank statements. So you're going to need 2 months, 60 days of bank activity.
Now, I'm going to ask the question that I think everybody thinking, especially first-time buyers. Well, why do you need my bank statements? Why do you need to see all of that?
We will be digging deep. So I want to make sure that you are prepared to provide all of the documents that are going to be required through processing, the processing of your loan approval and file once you go under contract. But we want to see where your funds are for closing in order to be able to have your money for your down payment. Or even if we get you down payment assistance, you still will have to demonstrate some sort of bank activity where either you've paid the deposit on the contract. That's called earnest money. So you're telling the seller, hey, I am giving you this amount of money. Don't sell this property to anyone else for this, let me process my loan. So we will look at bank statements. We want to make sure you know how to manage your assets or manage.
Absolutely.
Do not go negative on your bank statements if you're looking to purchase a home. Okay. I've had to
want to show that you're financially responsible.
Yes. Financially responsible. So I have had to pause a pre-approved buyer and say, hey, I'm sorry. We cannot use this bank statement. You need to carry a positive balance moving forward. Okay. Because we don't want to show a negative amount. That means you have nothing in the bank. You owe the bank money.
Yeah.
And that can happen by mistake. That's not like that you're completely, that can happen by mistake.
Absolutely.
Right? So we talked about pay stubs. We talked about tax returns. We are talking about bank statements. Also, there will be times that an identification will be required. Okay. So we want to make sure that there may be instances where you will have to submit an identification. Sometimes it's based on your credit report.
Okay.
And the last thing that we do is a credit report. Okay.
Now let's talk about credit. All right. We all aren't, we weren't taught about credit. We didn't even know how to maintain it, that we needed. So I want to first talk about the lowest credit score that you absolutely can get someone approved for. And then I want to talk about the different tiers that you mentioned with some of the other programs.
Okay. I would love to talk about that. First, I am an advocate for people in any credit range. I don't like when we try to shame people for having bad credit.
Absolutely.
Because there was a time that my credit score went down very low.
We all been there. We all have.
There was a time, and there was a housing agency and a credit union that I still love to this day. They gave me a secured loan and they gave me a secured credit card. And that was after me being a very responsible professional person. I had to put my life on pause because my parent got very ill. Okay. So that is a consequence of, credit. And I had all the tools. I had all the knowledge. I didn't have all the tools. So I started from the bottom and I got my credit to where it is today. So I'm an advocate of ensuring that we try to empower you. But once I teach you and you do not have a life-altering emergency, it is your responsibility to keep that credit up.
Yes.
Okay. So the lowest credit score that I can do a mortgage financing on is a 580. Okay. 580. So what that means is even with a 580 credit score, I can even give you competitive interest rates by utilizing a first-time homebuyer program that doesn't necessarily punish you for having a lower credit score. Okay. But I would love to have a higher credit score for you because I have less restrictions. So if you had a higher credit score, instead of getting you approved for $150,000 home, because we need to stay within certain parameters, at a 600 credit score, at a 620 credit score, those parameters, you say bye-bye. Okay.
Nice.
You say bye to those. So I would always highly encourage that even if you're at a 580 and we can get you approved today, and that loan amount fits your goals, and that a payment is affordable to you, I say we move forward.
Got
it.
Got it.
But if
So
there's,
I'm sorry, Nina, go ahead.
But if there's an opportunity there to get you to the next area, like to the 620 to 640, where there might be down payment assistance opportunities for you, I'm going to show you how to get there.
And that was my next question. So let's say someone does have a 580. What are some actionable steps that you can possibly give them to help them bump their score up slightly so they can get a little bit more bang for their buck and get more, incentives?
I use the cheat code. I have direct access to an algorithm that's tied to your credit score, that credit report that we use to qualify you, that tells me what you need to pay off, close, or pay down in order to see your credit score increase.
Wait, pause right there, because we're not going to skip over that, okay? Did y'all hear what she just said? She literally can tell you exactly. She's not guessing. She's not assuming. She's telling you exactly what you need to do in order to bump that score up. Go ahead, Nina. I just didn't want them to miss that.
And we have, these are actionable clients. We can pull up, I probably have about 2 people who are watching this video who probably join and say, yes, I did what's called the credit simulator. And the difference between the credit simulators that you find on Credit Karma, they're based on consumer facing credit. I am the financing facing credit. My calculations are a little more detailed because I'm actually looking to loan you sometimes 6 figures. Most of the time it's 6 figures. So
real quick, Nina, I don't want to cut you off. Remember what you're saying, but we had a question in the chat. How much do you charge? Break it down. Let them know. Let them know, Nina.
There's no charge for that.
It's free. It's absolutely free. FREE. Okay.
And if there's free, give me 3.
Hello.
Okay.
Go ahead, girl.
So this credit simulator is a report that it's tied into the algorithm of the credit report when I pull your credit. Okay. I am not a credit repair specialist. All right. If there are individuals who might benefit from going to credit repair or credit restoration, that's a different topic.
Yep. And a different team member.
And a different, yes. What I do is simply look at the credit that I have in front of me. And if it says pay Capital One down to $100 balance and your credit score can increase by 10 points, make an extra payment on your car note, close this authorized user account, repull your credit in 30 days. I've seen it happen time and time again.
Yes.
I've seen it happen time and time again. I have a client, we did this in May. They went under contract in September. They closed at the end of September.
Nice.
So this is very real. We were at like a 563 and he got to the 619. And that's all we needed. There was no.
Won't he do it? Won't he do it?
All he did was pay off debt that was already his own. Okay. And there are times where you need secured credit. So you need to get some revolving credit, like credit cards on your credit to sort of stimulate the algorithm, because that's one of the biggest line items that impacts credit. Someone said something.
She said, where do I start? She said she needs help. Where does she start?
You start here.
Absolutely.
You start here. There is a link to apply for at my loan portal in my bio, and you would just add Cierra Thurman's name as your referral source, and that is all in my bio. So I could probably even,
and I'll make sure I put your information in the video as well. So you'll be able to get directly to Nina's page. You'll have all her information, her links, and be able to get in contact with her. So I have some clients that want to start house hunting, right? They want to go look at these houses and they don't have a pre-approval. Let's talk about what the pre-approval is and why it's so important.
Once you have a pre-approval, that's a check with your name on it.
Yes.
Allowing you to buy that house.
Absolutely.
Allowing you to buy that house. That's what a pre-approval is. You are telling not only your realtor, but you're also demonstrating to the seller.
Yes.
You know, something interesting. A few months ago, or no, when the market, it was December of 2021.
Okay.
I went to New York. There was an open house. Open house. They wouldn't let anybody get into this open house unless you had a pre-approval.
A what? A pre-approval.
Approval for an open house. Now, Cierra, I'm going to let you explain what an open house is.
Yes. So an open house is when the seller's agent or the listing agent is showing the property to potential buyers. But you're really not a potential buyer if you haven't been pre-approved, right? So you have to demonstrate that you can, if you like the home, purchase the property.
Right.
I can even give a more recent example. A listing that I'm going to be closing very soon, 7800 Wabash. I had people come to the open house. They loved the open house. They wanted to submit an offer, but they wasn't pre-approved. By the time they got pre-approved, the property was already under contract. It's too late now. So you need to have your pre-approval. That's like your ticket to admission. You need that to even go house hunting. Absolutely.
So it traditionally in our market, as the Illinois, Chicago surrounding suburbs, and most of the other markets, because I am licensed in multiple states, they don't require for you to be pre-approved to enter an open house. Well, in this particular area, when I went to visit some family in New York City, I wanted to do, my real estate thing. I always check in what's happening in the market in the area. You couldn't get in unless you were pre-approved, just for an open house.
They not playing no
not
games.
even for the open house.
So let's say,
go
ahead.
For a pre-approval is your green light to go out shopping, and once you see that house, you can confidently submit an offer and know that you'll be able to get your financing processed and started.
Absolutely. So the loan offers essentially is like the money man, the money woman. They're the ones that's giving you the funding to even purchase the property. You only gonna put down a small amount, and we're gonna talk about those amounts.
Yes.
But the lender is the one putting down the majority of it, right? So we need to know what your budget, your true budget is.
We need to know that. You need to know what your budget is, not when you're out there already shopping trying to put in an offer.
And now after you fall in love with a property that you cannot afford.
At pre-approvals, I provide a loan summary at pre-approval. Although it's an estimate, but it gives you a real picture of not only your monthly payment, but all of the line item costs associated with acquiring. Okay, so even if you do a low or no down payment type of assistance, you still are going to need some money because of closing costs if those aren't negotiated in, right? So although a lot of those scenarios are different, and we can run, we run through scenarios for clients all of the time, it's important to feel confident in your financing and not just receive a pre-approval letter that doesn't give you at least a breakdown of what your monthly mortgage payment is and how much to expect to bring to closing.
Yes.
What are the terms of the financing? I've seen pre-approvals that individuals have sent me. There's not even the monthly mortgage payment. And, everybody wants a $400,000 house or this huge 4-unit building. But then when we sit down and show the reality of the numbers, then you could say, oh, that fits in my budget. I can handle that.
Exactly.
I can adjust to that. And there might be some instances where you say, that is not what I had in mind.
Exactly. And it's so key to know those numbers. So let's talk talk about, I like that you mentioned the 4 unit. I'm actually going to be dropping a house hacking course next year. And I
What?
know you're actually going to be on a house hacking panel tomorrow.
Yes.
So I wanted to discuss that just a little bit, right? I like the 4-3-2-1 method, where you start with that 4 unit. The next year you move down to the 3 unit, the following year the 2 unit, and then finally your single family property or single family home. But maybe 4 units isn't for you. Maybe you started 3, maybe you started 2. Let's talk about that. Let's talk about, from the lender's perspective, how would you qualify them for something like that, a multifamily? How much they will have to put down, right? Because I know when people think, oh, this is a big building, they automatically think it might be more than a single family home. So let's just talk about the differences there.
Well, first, I just want to add and say, buy the most amount of units for the least amount of down payment on your first purchase.
Tell them
If this
one
is
more
for you,
time. For the people in the back of the room, Nina, tell them one more time.
buy the most amount of units for the least amount of down payment on your first purchase.
Yes.
Okay. On your first purchase. Not everyone wants to be a landlord. Not everyone wants to be a landlord. But there's people who tell me, well, I want to buy my house first and then I want to get a building next year.
Like that's the wrong order.
That's the wrong order, right? Buy the most amount of units for the least amount of down payment, because we could do that on usually an FHA or 5% down conventional loan. There are loan options to get you in with the lower down payment, but they tend to be lower when it's your first purchase.
Yes.
They tend to be
So
lower.
for my first time buyers, I know you want the house. I know you do, right? But we're going to be financially smart. We're going to build our legacy and our generational wealth by moving into the building first. You don't even have to stay there long. Nina, what is the requirement for the amount of time they have to stay in the property?
1 year of primary occupancy. So you will have to occupy this property as your primary residence for 1 year within 60 days of closing. Okay.
1 year,
1
people.
year.
They literally can set you up for the rest of your life.
It can.
One property.
We have tomorrow, the event that I'm doing tomorrow are actual clients. One of them just closed 2.5 weeks ago.
Nice.
Going to the second purchase. So although I am one of the hosts, we want the consumer clients to be the star of that panel, because like you said earlier, sometimes we talk too much industry specific terms.
Yes.
Okay. So these individuals, or you, those out there, I'm talking to you, you know who you are. If this is something that you're looking to do, let Cierra and I help you set you up, not just for one purchase. We can get you into multiple home ownership in the next 5 years. It's going to create a portfolio for you. Look, once you start making more money as we grow in our career, you get taxed more.
Yes, you do. Yes, you do.
This country benefits, this country's tax system is made for the business owners. It's made for those who invest in real estate.
Yes.
Okay. And a lot of other reasons, but those are the two that we're talking about. So we can show you how to leverage and utilize the rental income from these other properties to qualify for the next purchase. And don't just get properties just to get properties. We want to make sure that you're cash flowing, that it's affordable, that it's still affordable, right? That it's still affordable. And that's how we're talking, house hacking. So you start with the most amount of units, and then you rent out you're going to rent out your unit and utilize a loan to occupy another primary residence. You have to move in to the new property.
You have to. Okay, people.
Over here. Okay.
We're not doing mortgage fraud. We do not condone that. You have to move in. Okay. You have to occupy that property for 1 whole year. and I'm going to be teaching more about that. A lot of people refer to it as house hacking. I call it house hopping,
Oh,
okay?
house
Because I'm going to
hopping.
hop to the next house after the year. You hear
I
me?
like that.
I'm going to
I
hop
like
to the
that.
next house,
House
and
hop.
I'm going to utilize the banks, other people's money. I want my money to stay in the bank. I don't want to have to put all my money down. And why should I? Because this program's out here to help us. So help me help you. Okay. That was so good. I'm sorry, Nina. All right.
So after you formulate a plan, okay, because the good thing about keeping in tune with your real estate agent, Cierra's going to encounter opportunities that you won't find on your own. The internet is made for like some information, but it can never give you the insight, off-market deals, soon to come,
Yes.
that your lifelong real estate partner who is helping you, establish, and even with 2 properties. Okay, so story time, right? So on Thursday, there was this, I am bilingual, by the way, hablo muy bien el español. I had a woman, a mature lady, come to my office and meet me. Simple lady, right? Once she started talking about her scenario, I was blown away. Back in the 90s, she purchased 2. She had actually 4. She had 4, but she sold 2. She's purchased 2 huge commercial properties in Bucktown and Logan Square.
Wow.
Now, back in those times, these weren't the most ideal,
desirable neighborhoods. Hello.
Desirable neighborhoods. So now, with the access of equity that she has with these properties, she has become a developer. Okay, simple, just ownership. A simple millionaire. So this lady's sitting across from me, right?
Ownership.
And she just, with that, she's been able to purchase properties cash, rebuild them, luxury homes, and she sells maybe once a year, twice a year. She does that. And she's been doing that consistently because of the equity she has in this $1.8 million property in Logan Square and $1.2 million property in Bucktown.
So let's talk about equity because someone on here may not know what that is, right? Okay. So let's break that down.
So that is the amount of value that you have in a property that is yours. There's no loans or anything against it, right? I don't think, do you have a better explanation?
So how I explain it, let's say you purchase, I like doing fix and flips. I like renovation property. Some you got to put a little sweat equity into. So let's say you purchase a property, and we're going to keep the numbers super simple just so you understand the concept. Oh, excuse me, guys. Okay. So let's say you purchase a property for $100,000 and you put $50,000 into it. So now that loan is $150,000. But after you've renovated the property, the other comps in the neighborhood are at $250,000. So now that property that you only owe $150,000 on, the equity bumps up to those other comps, right? So that property now is worth $250,000. You only owe $150,000. So you have $100,000 of equity in that property.
Yes.
I think that's the easiest way to explain it.
That
equity, that's your money.
You
can do what you want with that. You could buy more property with that. I mean,
so this, she just blew me away. Okay, so we started talking about the current scenario we're talking about, but then I spent time and I wanted to hear her story.
Yeah.
I want to hear her story. You know why? Because right now people are saying, or I don't want to buy, or that rate is too high. She started off, one of them was a 12% interest rate. Okay.
And we tripping about 5.
It's not, it's about, I think the media has stuffed it down our throats and not allowed individuals to think for themselves.
Yes.
If you can afford it, buy it.
And I'm going to
Because
tell you, you can't afford it because you're in real estate right now. If you're renting, you're just on the wrong side of it. This is no knock. This is no shade. But most of you all are paying your landlord's mortgage plus giving them extra cash flow in their pockets, right?
Mm-hmm.
So you absolutely can afford a mortgage because you're already paying one. It's just not yours. I digress.
Okay. So I had to hear a little bit about how she, or I took time to listen because I know this story. I know this story 1,000 times,
Mm-hmm.
but it came to the forefront to me because I'm sitting across from an unknown millionaire.
Yes.
Unknown millionaire. Okay.
Right in your face.
And I have to take the time to be able to motivate other individuals because at that time she would have been in her late 30s or early 40s,
Mm-hmm.
right? And there's no age discrimination here, okay? I just want to give you guys a picture of what I encountered a few days ago.
Yes.
So here I am in front of me being able to hear the story of how this woman is now a millionaire, and it's all based on real estate because she didn't work for those. She did not go to a job and get those millions.
Right.
Okay? She did not go to a job. She did not clock in or out. And I'm not knocking anybody because I also work, right? I also work. So I'm not knocking anyone. But a daily job is not what accumulated the millions.
That wealth. Point blank period. Absolutely.
So she purchased that property at 12%. And at that time, it was like $250,000 from what I remember of our conversation. That's what she paid. And that was high. Okay. That was high. That was high for her. That was almost out of her reach.
Mm-hmm.
She had to get somebody to help her with the down payment. She had to get her sister-in-law to co-sign for the financing, but it was a yearning within her. She said, Nina, once I figured out my first one, when I bought a property on my own, she had a little house. She said, once I got that first thing, I knew I could do more. And it was I knew I could do it again. It was a yearning in me. And everybody thought I was crazy. Mm-hmm. But once I got that first property and I started seeing the money that's coming in rental income, I didn't care about the rate, right?
Yes.
I didn't care about the cost. We're talking about the net return that you're looking at monthly.
Mm-hmm. Absolutely. Let's talk about these new loan limits.
Oh.
So many people may or may not know about them. So let's discuss the new loan limits and what that means for potential clients.
I have to actually pull them up. I don't know them by heart yet. Usually I know these things by heart. So the new loan limits, what that means is this is a maximum amount that we can finance under these specific programs. Okay? Mm-hmm. Right? Just because we can finance this maximum amount, you would still have to qualify for it. Okay?
Absolutely. Because
the loan limit went up, you still have to qualify for that higher loan if you're looking to finance.
So while you're looking for that, I'm going to talk briefly about the importance of having a loan officer and the right one on your team. Again, the lender is the one that's going to be providing financing, and they're going to help you with your financial picture, right? And just because you get approved for a certain amount doesn't mean you can afford that amount. So Nina's going to break down those loan limits. I want to just say that again. On your pre-approval, it might say $500,000. But after you look at that mortgage payment, you know that's not in your budget. Yeah. So I want us to be realistic with our budget and not go beyond our means. But when you're purchasing multifamily, you also can qualify with that rental income from your tenants and future income from your tenants. But go ahead, Nina.
Okay, so wait a minute. We need to talk about that again. We need to talk about that again. So rental income the proposed future rental income of a multi-unit property can help you get qualified.
So by proposed mean you don't have the tenants yet, right?
Have the tenants.
You don't have tenants. You got to a 3-4 unit building. It's vacant. You're moving in one of the units. You don't even have tenants yet.
And
But guess what? The lender is counting that extra money that you will be making. Go ahead, Nina.
we will count that. We will, because we already take a vacancy factor.
Mm-hmm.
And vacancy factor is we take into account in case one of those units is vacant, we only utilize 75% of that you proposed monthly rental income. So if we have $1,000 coming in on one of those units, that's $750 a month that can be credited towards your income.
Mm-hmm.
If we're talking about 3 units, that's almost $3,000.
Alone.
Okay. Alone. All right. So yes, that's why we say purchase the most amount of units for the least amount of down payment.
Absolutely.
All right. So let's get to these loan limits.
Yes.
On FHA, and we can jot these down. There's also, I have some posts on my page if you want to screenshot that. But the 1 unit purchase price limit is $472,030. So you can go into this property at 3.5% down.
So
okay.
Wait a minute. Somebody need to drop that in the chat. Okay. You said $472,000 for 1 unit.
Yes.
At 3.5%.
Yes. You can do 3.5% down. I remember when that used to be considered jumbo and you had to put more than
exactly
20% down. A 2 unit under FHA financing for a 2 unit property is $604,400.
Wow.
604.
2 units, $604,000, guys.
3.5% down.
3.5% down. Do you hear me?
Yeah.
Go ahead, girl.
Okay. A 3 unit, $730,525.
So beautiful. Such a beautiful thing.
In the very recent past, these would be considered jumbo numbers.
Yes,
which
they
means
would.
We didn't have access to this amount of money.
Exactly.
Okay. In the recent past, and I'm not talking many years ago. This is a few years ago. These were not the kind of access. We didn't have access to this kind of funding or these funds. And the 4 unit is $907,900. $907,900.
Okay. So let me share something with you all. If you follow me, then you know for my birthday, I always give me some what? Some property. Okay. I literally, that's my gift to myself, right? Our time to be in a property and occupy it is what? 1 year.
1 year.
And how do I know when they get rolled around? My birthday. Okay. So you best believe February is right around the corner. I'm definitely going to be utilizing this. Go ahead, Nina. I'm sorry, girl.
Right. So these are on FHA side, right? So 3.5% down on any of those programs. 1, 2, 3, 4 units, 3.5% down, no question asked. If you qualify, we can get you these loan amounts to find that ideal property.
So what do you need to do to qualify? I'm asking for a friend.
We want to make sure that your credit, and this, you can still get into these loan amounts with a 580 credit score. But I just want to make sure that you're financially savvy and that this is affordable for you. And the rental amounts are going to offset this mortgage for you. So we're not just going to try to get something in there just to try to make it stick.
Absolutely.
Right? I take a much pride into being able to establish sustainable communities. Okay.
Yes.
I take much pride into that. That is one of my passions. And although, if you qualify for an amount, I cannot lower the amount because I think you don't manage your finances correctly. But what I do is I will talk to you about financial dieting. I will send you to one of my housing counselor specialists that will give
Yes.
you a counseling session and talk to these things about you and even assist you with a monthly budget and a breakdown. So those are the steps that I take to ensure that we're setting you up to win, right? Because
Love
I just
it.
don't want to close a transaction today. Okay. I want, I just want you to be stable. And then when it's the time to sell or when it's the time to rent, that you walk away making it a financial benefit for you.
Yes.
Because one thing a lot of people don't take into consideration is the tax incentives and the tax write-offs that you get through property.
Yes.
Okay.
Absolutely.
So
Okay. So
the
we talked about the pre-approval. You got that. You may house shopping with me or purchasing a building. We now have the buyer and the seller. They agree to terms. We're executing. Both the buyer and the seller agree. You're now under contract. Nina, from a loan perspective, from a lender's perspective, what is your role then? What do you do at that point?
I have to package everything, get updated documents as a buyer. Please be prepared to submit all of your documentation. I have to give Cierra a kudos. Let me tell you, we have an example of a very responsive buyer. I mean, and that goes to say because there are certain groups of referral partners that I have that their buyers are prepared. They have these kind of conversations, okay, where have your income documents readily available.
Yeah.
Have your bank statements readily available. I pre-approved you 3 months ago. You're under contract now. We will be requesting updated documents. And we may request them again right before closing.
Mm-hmm.
As long as the dates, because we cannot have documentation that expires.
Mm-hmm.
Okay. So for income documents, we want to have those dated within 30 days of your transaction. Okay. For bank statements, we want to have those dated within 60 days of your transaction. All right, because we know the cycle for bank accounts it's a little longer.
Yep.
So just you will get requested some updated documentation. Then the second thing that I do is I will call and congratulate my client and then go over the proposed mortgage payment with them.
Yeah.
Because I've done two things during this time. I've looked through the contract. I've looked and made sure that the taxes I'm using updated taxes on the most recent tax bill available for that property to inform my client of what their expected and proposed mortgage payment will be. Then I've also set up some referral sources for insurance while also advising my client or our client, hey, get an estimate on how much your insurance, your preferred insurance would give you to insure your property.
Right.
Okay. So those are the two things that I'm doing. If I have a quote for insurance back, I then call our buyer and I say, congratulations for this contract. Hey, I've looked at the tax bill. I'm sending you a copy of the tax bill so you can know what the taxes are. This is what your proposed monthly payment would be.
Mm-hmm.
Is that what you had in mind?
Right.
All right. Now it's time to lock your interest rate. These are our loan options. This is what we're going to do. Are you okay with us locking in your interest rate today? Here you go. This is our lock rate. This is our proposed monthly mortgage payment. There should not be any drastic changes on this unless your insurance changes, unless you're in tax bill time and a tax bill comes out. And then I also discussed the amount needed for closing. Okay.
Absolutely.
So we go through the loan summary. We talk about bank fees, appraisal, title charges, and title is where it's the company that transfers ownership from the seller to you. Okay. Local taxes by the municipality, anything that we have to put away to pay for mortgage, for taxes and insurance in the future, that's called escrow. So that's what I'm doing even before submitting your file to processing.
Yes.
Even before.
So Nina is prepping the file to go to underwriting, right? And after we go to underwriting and we're successful, we get 3 little letters that we love to hear, CTC. And what does that stand for, Nina?
Clear to close.
Woo!
This means that the financing has not only approved you, but signed off on the property.
Mm-hmm.
The underwriting approval team, when I'm speaking to my buyers, I don't say underwriters. I'm like to the approval department, because they have to look and confirm all of the information that we have provided.
Mm-hmm.
Then once we issue the CTC, Cierra takes over. She does, the attorneys schedule the closing.
Yes.
Okay. The attorney schedule the closing, and then Cierra will set up your final walkthrough. Okay. Because even though you're under contract to buy this house, doesn't mean you can just walk in at any time of day. Okay. We just because you're buying this home, you still need
not yours yet.
It's not yours yet. So you need to have permission to access this property. All right. Let's say you wanted to do a measurement for windows or something like that. Most sellers are very gracious and they will allow you to do that.
Absolutely.
But you still need to ask permission. Okay. You still need to ask permission. Then after that, after the attorneys set up the closing time and date, Cierra does your final walkthrough. What's the purpose of the final walkthrough, Cierra?
So the final walkthrough is to ensure that the property that you saw before, you're getting it in the condition that you're expecting it, right? So before we close, before you give up your closing costs, any fees, we want to make sure the property is in the condition that you're expecting. Nothing drastic has happened since the last time you were there.
Okay. So usually I'm not involved in the final walkthrough, but sometimes I have to pause your, I get a call saying, hey, we have to push back the closing a day because they didn't finish painting that kitchen they said they were going to paint. Or the, you know, the new window wasn't installed or whatever. I'm not involved in the final walkthrough per se, but I still check in on you. I want to make sure that you're 100% ready to go, because the next step is pretty drastic, right? So you're going to a title company.
Yeah.
You're about to take ownership of a property, which you've never done before. You're about to sit in a table with an attorney, okay, with a title representative, and they're about to put you know how exciting it is to get a new car, right? You know how exciting it is to get
very much so.
Imagine that excitement 1,000 times over, that you feel it in your, you feel it at the bottom of your stomach.
The
like,
depths of
this property is mine. This is happening. I can't believe it. You know, that's one of the most exciting feelings. So we want to I want to keep in tune with you. I need to make sure that you're 100% okay. So right before closing, we will send you closing instructions. Okay. Me and my team send out closing instruction. Also, it's not something that every lender does. It's okay, right? But I'm just telling you what I do. So we send out closing instructions. We tell you where your closing is. We give you the date and time, okay, that they've confirmed. We say how much you need to bring to closing. We tell you exactly where these funds need to come from. I don't say get a check for, you know, $8,000. I say get a check from the verified funds at your U.S. bank account ending in 123.
Exactly.
Made out to XYZ title company.
Absolutely.
Why is this important? Okay, 2 reasons. The U.S. Patriot Act and the anti-money laundering laws. You might keep everything lined up and perfectly ready, but the federal government requires us to take additional steps in securing all the funds that are being used to acquire real estate.
Yes.
Okay. So although the money might be legitimately yours, you had it at a Chase account, but you never showed us that Chase account, or it was a joint account with one of you, and you said, well, Chase is closer, let me just get it from Chase.
No.
We want the funds to come from the assets that are verified and signed off by the underwriting department. Absolutely. That's why these closing instructions are so important to us.
Absolutely.
Okay. Then
and one thing we do not want you all to do is get the mattress money and deposit it into your account before closing. Okay? you got money in your safe in the house, or no large deposits. We don't want anything drastic happen. We don't want to go buy a new furniture set for your new home
No,
before you close. None of that. Okay.
none of that. None of that. So I'm just going to repeat what she said, but from the bank. Don't do it. No major purchases. And throughout the process, you're going to get a few reminders from me, from not only my automated system, because you will get emails from me that are from my automated system. And it says, hey, we're getting into the final steps of your loan. Please remember not to get into any financial debt. One thing I want to clarify upon that, Cierra, you don't need my permission. I'm just trying to make it easy for you as a buyer.
Yes.
If you have an emergency that requires financing, and I have 2 examples in my lifetime that I think are legitimate emergencies. It's a medical emergency, right? And I had a client who had a tooth issue that got so horrendous. It was big. She needed a surgery.
Mm-hmm.
And if she was buying a little townhome. She had 2 part-time jobs, one at a speedway, and so she worked at gas stations. So this was, she had $3,000 for this purchase.
Yeah.
Right. And I had told her so bad, don't get any loans. Don't let your credit pull.
Right.
Don't let your credit pull unless it's an urgency or something that is, it's an urgency.
Mm-hmm.
You don't need my permission. You just want my clearance. You want to make sure that it doesn't impact your financing.
Right.
So she went to the dental office and she told the lady, I'm buying a house, if you guys finance it, how much would my proposed payments be and all this other stuff? The lady was nice enough to talk to me directly. She sent me a proposed payment. I plugged in the numbers. It was going to cost her an extra $56 a month to get this procedure done if she used their financing.
Mm-hmm.
It did not impact her debt to income ratio.
Mm-hmm.
She wrote a simple letter of explanation,
mm-hmm.
and we move on.
There you go.
My client took care of her medical emergency, and we still purchased the property. It was a small town home for $110,000, and I still remember her because the day she graduated, she didn't even tell me she was a full-time student. The day she graduated, she sent me a picture, and she said, thanks to you, I was able to get into my house when they told me that I couldn't finance with a part-time job. And yes, you can finance with a part-time job. Boom. If you've been on that job for 2 years, we can finance you. And if you're going to buy a 4-unit building, you with that part-time job and with the rental from those buildings, we can get you into
a property. Let them know, Nina.
Yes. And if you have recently, graduated and just started your career, you only have 2 months into your career, we can use your education as employment history. Okay.
Beautiful.
My son was on the live, and he's going to hang out with some of his friends who are graduating tomorrow from college. So he's downstate in college. And let me tell you, once they start getting their offer letters, my son is going to refer them to me, and we're going to look at being able for those young people who are graduating tomorrow.
Start early.
We're going to start them on getting some property.
There you go. There you go. Nina, I've kept you so long. I really appreciate your time. I think we done went through a million questions, probably a million more we couldn't go over. Do you all have any questions in the chat? If not, just give us like some final words of wisdom before we get out of here, Nina, and let people know how they can get in contact with you.
My final words of wisdom: be in tune with your finances. A lot of people are Netflixing and Uber eating their down payment away. A lot of people their monthly, they say, I can't afford more than $1,800, but I see $500 of frivolous, unnecessary spending.
Yes.
That sometimes it's okay. Like if I put up my bank statement, you're going to see a whole bunch of costs. Like today, I think I did a PayPal or something. And then yesterday we had a DoorDash delivered to, a party I was at. But I'm not in the process of buying a house.
Yes.
I'm not in the process of buying a house. I did my sacrifices. I made my nest egg.
Mm-hmm.
Okay. So if we are looking to create that future that you dream of, just take some time and reassess your spending.
Yes.
Because I see it. I see it. Okay. I see a lot more bank statements than Cierra probably does,
Yeah.
right? So I see the spending, and a lot of people, like I said, you're Uber eating, you're Netflixing,
Mm.
you're
Mm.
Huluing your down payment and mortgage payment away. Okay, so that's gonna be my mic drop. Let's look at our finances and really tune in on what's necessary to still live an exceptional life that you deserve.
Absolutely. So Nina, you have an event tomorrow, house hacking. Do you want to tell them about it before you get out of here?
So with some of my business partners, we're having a house hacking for the holidays event, where we are bringing, although we are the hosts, we're the ones who created the event, we're bringing past and very recently owners, right? So these are people who have already purchased that first property.
Mm-hmm.
Okay. One particular gentleman, he had a 2-unit, and he lived in the basement,
Mm-hmm.
and he fixed up the basement, and now he's gonna have a family member move into that basement, and he purchased a condo that's closer to his job where he just recently got promoted, where he can now have, so it's just a great thing. And this kid, I think, is in his mid-20s.
So
he's in his mid-20s.
He got 3 rental incomes already.
Yes.
Off that one purchase.
Off that one purchase.
And now he got his condo where he's going to be just living it up.
Yes. And he gets the tax write-off is going to be, that cash flow tax write-off is just going to be great.
And that condo was paid for. He's living rent-free, mortgage-free, cash flow coming in.
Cash flow coming in. So that's when he closed 2 to 3 weeks ago. All right.
Nice.
So we want to highlight people how they did it, right?
Yes.
He did save. So just because we want to buy the second property doesn't mean it's going to be for free.
Right.
Okay. So there was a lot of savings and there's investment, but this kind of investment, the monthly payout is way bigger than what you have in the bank.
It's so worth it.
Yeah.
Well, thank you, Nina, for joining us. I really appreciate you tuning in. This was an absolute treat. I'm going to drop Nina's information in the caption, so you all will have all of that. Thank you for tuning in to another episode of Building and Bonding, Assembling Your Dream Team. I'm your host, Cierra Thurman, your favorite real estate agent, and I want you all to have a good night and have a happy holiday.
Thank you.
Bye-bye.